Hey, what's going on? Scottie Campbell here, Waymaker Mortgage Group. I hope that you are having a fantastic late spring, almost summer day as you're watching this. Behind me here is the pond in front of my home that we are just so blessed to have this view. And so I wanted to share that with you today as I share with you some valuable information when it comes to mortgage forbearance. 2020 so far has been crazy. Really one of the most challenging and fast-paced change years we've seen in the last 10 years in mortgage and real estate. So whether you're a real estate agent or somebody who's part of the industry, or whether you're a customer, a consumer who's looking to buy or sell a home, this information is very valuable to you when it comes to what does forbearance look like with the mortgages. You know, the CARES Act allowed folks kind of a no questions asked forbearance provision. And that has created a lot of challenges for lenders and servicers. So, you know, I've had a lot of people asking, well, what do I do now that I'm in forbearance? I've had real estate agents asking us, okay, so if I have a seller who's in forbearance, can they sell that home and use a mortgage to buy a new home? Well, up until this week, and this has just been released, so it's hot off the press, but up until recently, we didn't really have any guidance from Fannie Mae and Freddie Mac, which are the government-sponsored entities that really oversee the majority of mortgages in this country and therefore oversee a lot of this decision-making that investors will follow. So we finally got some guidance. I wanted to share it with you. This is really valuable stuff. So let's tackle if you're selling a home and you want to buy a new one. Now, if your mortgage has been put into forbearance, number one, it's going to be very important, how is that reported to your credit bureau? So we're going to have to look and see what's being stated on the credit bureau. Is it stated as a forbearance? Is there any late payments or any issues like that? So you want to have a qualified lender that's really good at their job, look at your credit bureau and give personal advice, case by case situation. But the basic mandate is this: once the forbearance has ended, there must be 3 consecutive mortgage payments made under the agreement of the repayment plan. Now this is great news because as folks were going into forbearance, kind of the traditional outlook on mortgage forbearance has been once you resume payments, you have to make 12 consecutive monthly payments before you'd be eligible for a new qualified mortgage. So the fact that the GSEs are kind of really putting their heads together and allowing it to just be 3 consecutive payments after forbearance ends, man, that's really good news. So there's some temporary eligibility requirements for purchase and refinance transactions. So now I'm going to kind of tackle all mortgages in forbearance. You know, number one, the first thing that I said really does apply, and this is straight from the update we got from Fannie Mae. Lenders must continue to review the borrower's credit report to determine the status of all mortgage loans. In addition to reviewing the credit report, the lender must also apply due diligence for each mortgage loan on whether the borrower is obligated, including co-signed mortgage loans and mortgage loans not related to the subject transaction. So what does that mean? Well, if you happen to be somebody, or your client happens to be somebody that has 3 or 4 mortgages in their name, and they put 2 of those mortgages into forbearance, but one of them they kept paying on, we've got to look at all of the mortgages. So that's really important. The other thing is to determine whether payments are current as of the note date of the transaction, which is really important. So basically, you know, these forbearances are looked at as a loan modification in many times. Every case is a little bit different, so we're going to have to really dig into that. But here's my advice. Number one, have your credit report analyzed. Make sure your client has their credit report analyzed by a qualified mortgage lender who can, you know, really dive into the answers on these questions. And then number two, we've got to make sure that that forbearance has been brought current. Because even though a forbearance allows somebody to not make their payments and allows that to kind of be built up as debt that's owed later down the road, it still has to be brought current, which means the previously owed amount. So let's say you skip 3 mortgage payments and then come the 4th month you start resuming your payments. Well, we've got to determine what that servicer did with those 3 months worth of payments that weren't made. And we have to make sure that's been brought current one way or another. So then examples of acceptable additional due diligence methods. And this is from Fannie and Freddie. Is number one, it could be a loan payment history from the servicer, or we could use a third-party verification service. Number two, it could be a payoff statement, you know, for a home being sold or a mortgage being refinanced. It has to be the most recent, latest mortgage account statement from the borrower. And number three, we can do a verification of mortgage. So basically, here's the bottom line, folks. A borrower who is not current, who has missed payments on any mortgage loan, is eligible for a new loan if those missed payments were resolved in accordance with the requirements that Fannie and Freddie have issued. So we've got this table available, we've got all this information now that we can work from. And my advice is this: if you're in forbearance and you're considering to sell your home and buy a new one, or you want to refinance this year, get in touch with us. We'll do a quick free analysis and help you figure out where you stand right now, because I've been looking at a few of these cases this week, and everyone is a little bit different because every servicer has been handling forbearance a little bit differently. If you're a real estate agent and you have, especially you're listing a client's home for sale, you really need to dig in and you need to make sure that you're getting that payoff ordered, having the title company take care of that. Shoot, I'm happy to help you on your listings. We can help get that done. And even if we're not going to do the loan for that client, I would love to serve you and your business in that way. But the bottom line is this, folks: we need to work together to make sure that we understand these guidelines. Real estate transactions are challenging enough as it is, right? So we want to make sure that everybody's got the right expectations and the right information going into it. So bottom line, have a qualified lender. Me and my team, we're here to help, or if you know somebody great, do that. But have a qualified lender dig into your personal situation. If you're a consumer, if you're a real estate agent who's trying to advise your clients through this, really pull in the lender super early on the process, even for the listing side, to make sure that that client can purchase their next home and that there's not going to be any issues. Scottie here, always happy to help. Shoot me a personal message here on Facebook, or you can text QUALIFY to 512-943-2243. That will give you the right information to help us get started, to help serve you. Hope you have an awesome day. We'll talk soon.